watching Stockwatch. I'm Zinati Goman. Join me to unpack your stock-related questions today are Gary Booysen from Ruimsig and Ricus Reeders from PSG Hole in Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or an X at Business Day using the hashtag Stockwatch. Thank you so much for your time, gents. Actually, very interesting movement that I'm seeing on Richemont today. It is down almost 4%, and this is after results that a lot of people described as satisfactory yesterday. And we actually didn't see a lot of reaction yesterday from the market. I think it was maybe up by 1% or less than 1%. But Gary, I don't know, could we be seeing the actual true reaction and reflection of what maybe the markets may have thought of those numbers today? What could be happening with the share price?
Yeah, so I think Richemont's always going to be very exposed to currency fluctuations as well. And, you know, when we had, I suppose, not rumors, but I suppose the speculation that Donald Trump might be preparing to fire Jerome Powell, you saw huge fluctuations in the dollar. You saw currency markets around the world reacting. And Richemont being a multinational company, you know, the share price is going to react to that as well. You know, the rand was a little bit stronger today, which should have taken a little bit of the shine off Richemont. But if you look at Richemont as an underlying business, and you compare it to some of the other luxury goods retailers, you know, the likes of Hermes or LVMH, you know, you kind of feel that you get a lot more bang for your buck with a Richemont. Specifically, if you look at Hermes, which is very focused on a single brand, and yet, you know, Richemont's revenue, you know, far higher quality, I would argue, than something like Hermes. You know, all of the sector has been under a lot of pressure recently. So, you know, maybe a little bit of selling just coming through from the general theme that these luxury goods companies are going to be hit if there are higher tariff barriers kind of around the world. And we've seen it, you know, in the likes of LVMH's share price. I mean, you know, arguably one of the highest quality and the biggest and the best, and yet also under significant pressure over the last sort of 6 to 12 months. So I probably wouldn't read too much into Richemont falling today. I might have missed a downgrade by some analysts or something like that, but yeah, I don't see anything. Yeah, I see BOFA. You know, they cut their target price in francs from 175 to 170. So not a huge target price cut. You know, maybe a couple of the sell side also just reacting to that earnings. But yeah, like I said, that typically is not a large adjustment from the sell side either. So I don't think it would derail the investment case around Richemont.
Okay, Ricus, as Gary says, you get a lot more bang for your buck with Richemont. So would you be taking this dip today as an investor as a buying opportunity maybe?
I think so. It was my stock pick, I think, a week ago.
Okay.
The results were pleasing, so no problem on that. I think they are far more, they are different from the rest of the luxury market just because of their jewelry masons. You know, the rich aren't getting poorer, and it's and tariffs and that kind of thing won't affect people going to buy a piece of jewelry from Cartier or whatever. I don't think it's expensive. They might suffer from a general negativity towards the sector, but at current prices, given their, I would say, defensive nature, I won't be too worried about day-to-day fluctuations, especially the kind of little dip we've seen today straight after their results.
All right. Well, talking about dips, we saw a huge one on Bytes a couple of weeks ago. And there's a question here, is it a good time to buy Bytes Technology? And I mean, yeah, that share has not recovered at all, Gary. And I'm wondering if this is the time for people to start looking, or should they maybe wait a little bit?
Well, it's a good question. I suppose you need to look at the future of Bytes, you know, in I suppose an AI-driven world as you know, primarily a Microsoft reseller in the UK. It also picked up a downgrade. This was after their AGM statement where they said that their operating profit will be marginally lower than everyone was expecting. But again, I think it comes down to the fundamental business case around Bytes, especially if you're buying it for sort of on a 5 or 10 year view. This is an industry that's changing, dramatically. And you can see it with, I suppose, the pricing power that Microsoft has with its resellers. They can change what those rebate agreements look like. You get at least the CSPs, the cloud service providers, which typically service more of the small and medium enterprises, and then you get those big enterprise agreements. And I think part of the worry around Bytes at the moment, and the reason that the Bytes stock price has come down, is that Microsoft has been putting more and more pressure on their resellers. We've seen that. Specifically with the government contracts around the enterprise agreements, it has improved, and Microsoft has given some leeway to its resellers. But I think it's an interesting one because it's a very technical space that they play in, and again, you look at their profit. I think 25% of their profit comes from the security industry, and I don't think anyone is arguing in the rapidly changing technological world that we live in that IT security is becoming more and more important, and the business is entrenched in so many companies. I can't even imagine an economy trying to operate without Microsoft products like Office and all the other tools that they supply. So I think the challenge for Bytes specifically is that it is sandwiched as a reseller. It's not the Microsoft products themselves. They benefit through greater penetration, but they can see their margins squeezed, and I think that is a risk for the company. But I mean, at 20 billion rand at the moment market cap, it's been a success, an incredibly successful spin-out for Ultron as well. So, I'd be hesitant to say, there's too many risks. It's not something I'd look at. And typically, when there is volatility around stocks like this that are fairly high quality, you can probably go and buy the dip.
I mean, you know what? For me, this also reminds me of the sharp dip we had in Aspen, where the share has struggled to come back. And I even look at Aspen's troubles and Bytes. And Ricus, I wonder then, are the markets just saying that this is too much of a structural risk with Bytes that we can't just come back?
Yeah, I wouldn't necessarily want to compare the situation Bytes is in with what's happened to Aspen. Aspen was a severe undelivery of a promise. Bytes is busy moving to a higher margin business because I think that's, as Gary explained, that they are resellers, so they must protect their margins, and that's at the cost of revenue. They specifically stated that it hasn't quite worked out as well as they would have hoped for the 6 months, but they expect things to get better, which is what they would say. I mean, but I think just looking at the share price, the fall it's had, it's sitting now on a historic price earnings of about 14. I think that's too cheap. But then again, I won't be going in and buying with both hands because I like trends to establish themselves. They can go cheaper. But be that as it may, just taking a look at what the company's plans are, the current historic valuation, the growth of the industry itself. I mean, it's a competitive environment that they are operating in, but I don't think.
Oh, Ricus, are you still with us? Oh, Ricus is frozen there. Ricus is frozen. Okay. While we're waiting to get him back, Gary, let's go into mining. Orion. My question on Orion Minerals, they have recently launched the sale purchase program for shareholders. I'm a retail investor, so from my perspective about copper being in everything that is the future, is this opportunity with Orion a good, great, or ugly investment? Or is this a once-in-a-lifetime opportunity to that 100 times winner? So basically asking if this thing can be a 10-bagger. I actually recently spoke with the CEO. When was it? Yesterday. Okay, that will actually be aired next week. But they actually say that they want to, because they're in a transition from an exploration company to where they want to produce. And the CEO was actually saying that they should start producing by Christmas 2026. That's soon. What would you be doing with a company like this? Because I know that investors are quite wary of exploration companies. But the fact that they're saying that they're going to start producing next year, how do you feel about it?
Yeah, I think I'm one of those investors that are very wary of exploration companies that move into production companies as well. So, obviously they have had that management change quite recently. With obviously Tony Lennox coming in. Exploration and development, specifically if you are looking at, let's say copper assets, I think you can definitely make an argument, as you said, around higher copper prices, their use case in EVs, but there's huge execution risk when you're looking at someone that's taking a mine from a feasibility study all the way through to production, and typically, these kinds of timelines are in the 20s of years. So, I don't follow. Orion is a sub-billion rand company, so very difficult to get in and out of for kind of larger volumes. I think its market cap's trading just above 800 million at the moment. So, can it be a 10 bag? I think absolutely. I think that's why you buy exploration companies, and that's why that's part of the allure of the mining sector. That there's a great story around the underlying price, and I think the caution is that investors too often forget just how difficult the execution can be as well. And I think that's kind of where the rubber is going to hit the road. If they can take it to production, or they can get a partner that they can on-sell it to, I mean, that's where you kind of see the uplift in the share price. I haven't looked at the specific mechanics or deal mechanics on this one, but yeah, like I said, exploration companies, just be careful, because there might be a great story about copper and where copper prices are going, but that doesn't necessarily mean that Orion is going to capture that whole upswing. It might not have the operating leverage that you have with a more established copper miner, but at the same time, if they do get it right, these typically do trade at large discounts because of the additional risk. So if you're willing to adopt the risk, absolutely, it can easily turn into a 10 bagger. I think you have to have a lot of faith in management and their vision and their ability to execute. And like I said, with the kind of management change, I mean, Errol Smart stepped down. I think he said he was absolutely exhausted at the company. So it's a difficult business as well. So just understand what you're buying.
All right. We also do have another question on Jubilee Metals, which is also a copper producer. I think they did have PGM assets that they let go of. But your general view on, these junior miner kind of exploration companies that are trying to produce Ricus, that are specifically going into the copper space, that has a lot of bullish sentiment.
Yeah, look, let's just talk about Jubilee. First of all, they hardly exploration. They are in production. They're expanding their production, and they've been hit somewhat with country risk, specifically out of Zambia. And getting rid of the PGMs, at a strange time. The thing with copper companies, there's one thing they can't control, and Gary was talking about that, is the price they're eventually going to get once they're up and running for whatever metal they produce. That's out of their hands. The second, not difficulty, but uncertainty is always reserves. In other words, what I'm exploring, is it actually in the ground when I go and start digging my holes? And then the other thing is obviously execution, getting your plant running. Orion's got proven reserves, so I've got no problem with that, which is why I rather like it as an exploration company. Okay. So it's the execution factor. In other words, get the plant running, get it done on time and within budget, which is always a problem with any kind of startup. So there's always that risk. Okay. But as a copper player, if you're okay with the copper price 5 or 10 years from now, which I think should be okay, because it's not as if we're going to use less copper going forward. Then, as long as they can execute satisfactorily, having enough money available to construct and start running their plant, I think it's an interesting spec.
I mean, just with the fact that they've sold or selling their PGM assets, because obviously we know the pressure that the PGMs were under for a long time, and while copper was doing the complete opposite. Gary, there are some investors that question the move, especially at this time when the PGMs are just flying. But would you blame them for letting go of those assets? Because it's quite a volatile environment where nobody has a crystal ball.
Yeah, I think I'm more on the side of letting go of the PGM assets, and this is a furious debate that happens in just about every research meeting around the platinum price. Which, you look at the platinum market, it's been deficit for a long time. You've got to, if you look at it longer term, you expect demand to fall off sharply for platinum, just in terms of 40% of the global platinum is used in autocatalytic converters, which have 100% recovery. So when you scrap a car, you get all the platinum back out of it as well. So I have a kind of like an economic demand argument against platinum, but of course, I mean, we've seen platinum prices running up aggressively, and it all comes down to everyone can see the shift, but they don't make the shift fast enough, and we are still using ICE engines, so the internal combustion engine. So we do still need this, and there is a shortage, and that's obviously where you're getting a little bit of a supply squeeze. A couple of years ago, we were looking at the Russia-Ukraine war and saying, obviously, from Norilsk nickel and Russia, which is really the other country that has platinum, we expect supply to be constrained. You should see a shoot up in price. That didn't happen, and now suddenly it's happening. So, platinum is an interesting space. But on Jubilee Metals specifically, we've been kind of talking around execution risk. I mean, this deal of selling their PGM assets, whether it's well timed or not, and I mean, it's difficult to predict the commodity price. So I suppose time will tell. It is, however, a big move for the company. So remember, this company, if you look at it, it's about £100 billion company. So call that 2.4 million rand at current prices. They're selling off their assets at $90 million. So, I mean, that's 1.6 billion. You're talking about like 2/3 of the company is being sold, and you're believing in management's ability to refocus on the copper tailings in Zambia and make sure that is successful. Now, early studies, they're saying that they can get, if you've got 1.4% copper in a rock, they can get a 65% recovery from that, and it does look attractive. But I think you've got to look at the operating environment in Zambia as well. It's difficult. There's been all sorts of constraints around energy. This is not a low risk investment proposition, and I think as long as you go in with that mentality that this, if it's successful, if management gets it right, it's going to be wildly successful. If copper prices hold up, but there's a lot of ifs for me. So for kind of, I suppose I'm becoming conservative in my old age. So these kind of things just make me nervous. I don't know.
I hear you, Gary. I hear you. All right. One last question on commodities. Ricus, I'm going to give you Glencore, and Gary, I'm going to give you Harmony. The viewer says, I'm a holder of Glencore. Why is it not moving up? Is it not? I feel like I saw some movement, I think in the last week, and actually a lot of people were choosing Glencore as their stock pick. Ricus, Glencore?
No, I think the general consensus is of your big miners, and specifically after their last quarterly update, which wasn't all that great, is that the price has gone down too far, and there's a lot to make up as far as prices, share price is concerned when compared to the likes of Bulletins or Anglers or whatever. Glencore's always been a bit more of a trading company, in other words, than a mining company, or there's a lot more focused on their trading aspect as well. So they are more volatile. So you can probably make the case that they are fundamentally undervalued, and there's they have to do some catch up with the others. I'm still not very fond of Glencore because every now and again they get involved in some other legal dispute, to put it gently. So yeah, I would do it as a trading stock, but well, all resources are trading stocks, but even more so in the case of Glencore. But as Gary said, in my old age, I prefer to stick with something like Anglers or Bulletin.
Okay, all right. What about gold? Harmony has been going down in the past 3 months. What caused this? new copper assets. But I guess without the copper, though, Gary, was this kind of not expected, considering how high those gold counters have flown over the last while?
I think there might be a fallacy in markets. What goes up must come down. That's a physical law of gravity. It doesn't really apply as much in financial markets, and specifically around companies, because generally good companies tend to do better and better and better, and bad companies tend to disappear. So I wouldn't use a what goes up must come down analogy, because we're not talking about physics here. We're talking about companies and their ability to execute and how they're managed and how they work. But just a quick note on Glencore. So I think one of the reasons that people are probably looking at Glencore as well is that they have announced that enormous share buyback program. After I think it's the Bungie transaction. So there should be an underpin to their stock price just because they are going to be actively buying in the market. I think until kind of like early next year. So that maybe, they seeing their stock as undervalued, whether that's going to create shareholder value, maybe a little bit more skeptical, but maybe a little bit of an underpin. Looking at Harmony, as you say, we're talking about a lot of people that are jumping on the copper bandwagon at the moment, and generally that makes me also a little bit nervous. So obviously, Harmony moving into, doing the kind of the deal to get into Australia's MAC Copper. I listened to the executive talking around it recently, and it seems like the type of gold mining that Harmony does, it's actually going to be a very similar type of mining that will happen, at MAC Copper as well, and that they have a lot of translatable expertise, and it is about, I suppose. I think with all the gold miners that we have at the moment, there's some difficult decisions that management has to make, because if you look at, let's say the average all-in sustaining costs of the kind of big listed JSE gold miners, we're talking probably around $1,500 to $1,700, $1,800 an ounce, and we've got a gold price which is currently trading at above $3,300 an ounce. So enormous operating leverage. These companies are wildly profitable, and they have to make a decision: what are we going to do with all this extra cash? Are we going to return it to shareholders, which is wonderful, because hey, that's why we bought into your stock in the first place. We'd like some of that profit, but then you're kind of admitting as a management team that you don't have any good ideas. You've got nothing else you can do, and you're kind of actually getting rid of your job, because mines just get deeper and more expensive the longer you mine them, and eventually you run out of ore. So they have to do transactions as well. Do you want to buy more gold mines? Then you're going to get in trouble from your investors if the gold price collapses, because they're going to say, oh, you bought all those assets at the top of the cycle. That's exactly what you always do, you fools. So what else do? You go, okay, well, maybe we should buy some copper assets, and we'll stop being a gold mining company. We'll be a copper mining company. So I think all these mining companies are trying different things, and the ones that I suppose get the commodity price call right, and manage to, let's say, increase production if the prices stay firm, are going to look like heroes. The ones that increase production and then prices fall, they're going to look like fools. And I think it's a very difficult job for the management teams, because when you're trying to predict a commodity price, it's these are pretty efficient. So it's very difficult to do that. And as Ricus made the point earlier, a lot of these companies are price takers. I mean, there's very few of the diversified miners that can actually, truly control the price through their own supply. It's just it's not concentrated enough in the industry for them to be able to do that. I mean, here we're talking about Saudi Arabia and OPEC controlling prices. These diversifieds are going to struggle to do that.
All right, gents, we have reached the end of our mining show. Ricus, let's get to your stock pick. We have about a minute for the both of you. Ricus, what are you choosing today?
It's one I've had before. It's Siemens, the German company. They are focusing on industrial AI, which doesn't sound as exciting as some of the other AI talk around, but basically AI being used in the industrial capacity, whether it's providing software for a mobile telephone network or a building, and they're market leaders in that. They're moving from basically being involved in projects to a software as service model, and doing it very well. They're sitting on a price earnings of about 18, 17. If you compare it to some of the excitement in the market surrounding whether it be microchips or AI services, I think it's undervalued. That they can probably grow earnings at about 15% a year, puts them back on on price earnings of about 12. So I think they are cheap at current levels. They're trading at about 230 euros at the moment. I think they can go to 250 very easily and either that to 275, no problem.
All right. Well, quickly, Gary, where are you finding value today?
Yeah, I'm going to continue to be boring and pick Alphabet, but I really believe this is the one. I think I might have also picked it before. I mean, we're talking about Alphabet on a P of about 20, which is absolutely ridiculous when you consider, what this company has coming up ahead of it and the potential growth prospects for the company. I mean, we're kind of, even if you look at the forwards, analysts expecting kind of, low double digits. I'm talking like 10-15% earnings growth, which I just can't see happening. Now, I think one of the reasons that the estimates on Google specifically, but on Alphabet are so conservative is because everyone is worried that they're going to, chat bots like OpenAI and ChatGPT are going to cannibalize their search business and thus their ad revenue. Now, if you actually just take a step back and think about it, we're living in a world where Google's biggest risk has been regulatory forever. Everyone has been saying, but Google, you're dominant in search. You have 99% of the search market. We need to regulate you. We want to break you up. This is too powerful. And they go, but we're not. We're small in the advertising world. Now suddenly everyone's going, it's really competitive. You guys aren't going to last. And I'm telling you, the Google management and the Alphabet management are going, thank you. Yes, we're not going to last. Don't regulate us. It's a competitive space. We don't have a monopoly anymore. But you look at their underlying technology. I mean, it's absolutely fantastic. You're talking about DeepMind that they bought in. They run Android devices. They've got, arguably through Gemini, while it hasn't had the take-up of ChatGPT to the retail market, one of the strongest AI products in the market by a long way. I'm not even talking about Waymo, which is essentially their comeback to driverless vehicles, which is growing incredibly steadily. The whole architecture of their TPUs and the way that they're building the infrastructure around AI. Google Cloud that they cannot honestly build as fast as they need to supply. Okay. It is a phenomenal company, and you're buying it at 20 times earnings. I can't see why you wouldn't buy this company.
All right. Well, thank you so much for your time and for your analysis, gents. We really appreciate it. That is all for tonight's Stockwatch. Thanks to our guests, Gary Booysen from Rand Swiss and Ricus Reeders from PSG Hole in Ruimsig. Up next, the close. Stay watching.